Do you feel like you're constantly losing money in the market? Do you feel like the market can sometimes be a casino? Well, look no further than The Crypto Compass, your guide to everything crypto. Let's jump right into it. As you can see, I got my pop filter on my microphone today because my P's were popping in the other video, but I was still on my P's and Q's. My goal is to make crypto fun. I don't want to get into all the numbers, all the boring stuff, because if I did, you'd probably be asleep at this point in the video by now. So instead, all you need to do is subscribe to the channel, hit that bell button, and you will tune into every single one of my videos, and I'll keep you up to date in everything crypto. Let's go. The goal here is to be risk averse, which means less risk and more potential gain, and that's what I'm going to help you do. Sometimes you don't want to roll the dice and you want to bet on a sure asset. So I'm going to show you what those safe assets are, along with safe strategies for riskier assets so that you don't lose money. You want to invest in safe assets like Bitcoin and Ethereum. These charts and look at the safe assets, with those safe assets being Bitcoin and Ethereum. So right here, let me highlight it, Bitcoin and Ethereum. These are the two safest assets within the whole crypto market as a whole, with Bitcoin being number 1 and Ethereum being number 2. So what we have here is Bitcoin. It was the first ever cryptocurrency. As you can see right here, it's not as volatile as these other assets. And Ethereum is more of a network. Bitcoin is more of a store of value. So if we look over here, let me come out of here. Look at Bitcoin. If you look from the peak down to when it fell at the low from this past peak that it made in 2021, we are down about 78%. Now let's look at the same thing on Ethereum. When we look at Ethereum, we look at the high and then we look at the low. We are down 81.8%. So a little more, around the same, nothing too drastic of a difference. But now let's look at an altcoin. Let's take Doge, for example. When we go straight to the high, all the way to the lows, we're down 93.53%, about 94%. So as you can see, what you want to be looking at is these safe assets. And those safe assets are, again, Bitcoin and Ethereum. When it comes to trading or investing, you always want to buy at a low and sell at a high. But a lot of people get lost in this market and they end up buying at a high and selling at a low. Start with some charting. So let's look over here and let's go over the concept of buying low and selling high. So I have Bitcoin over here and I'm looking over here, up here on the daily for Bitcoin. And what I see is, obviously, let's say we are looking at this section over here. Let's say we bought over here. This would be a low buy, and this would be, up here, a high sell. So let's just say we bought at these lows, and then we sold at the highs. We would make 141% over a span, obviously, of 109 days. It's a big span, but something to consider compared to what most traders would do is they would take it from up here, and they'd ride it from up here all the way down here. And granted, that is a full year, but 78% down in a full year. A lot of people got a lot of hope. They were looking all the way up here and they were like, you know, I think we're going to go higher. This is when everyone was calling for a 6-figure Bitcoin. And you know what ended up happening? We got max greed and then we ended up falling all the way down to this level, which was the $16,000 to $17,000 level. So what I'm trying to tell you is to not get lost in that high level and to mainly look at assets when they get into these lower levels, which is exactly where we are right now. We're at this low. This is still low where we're at 30,000. Yes, it's expensive for a Bitcoin, but it's low because eventually we're going to get up to these high levels and higher. And let's just say we pump up to the highs. Let's go from here to the highs. That's already 124%. within Bitcoin itself. And now when you look at Ethereum and you look at altcoins, it's going to go even higher. I also want you to be aware of capitulation. Capitulation is where there is max panic selling, max fear in the streets, and everyone is trying to get out of their asset, and the asset just keeps falling down. This would be a good time to buy, but I say you be very, very careful, because you could be buying a falling knife. Basically what that means is you're buying an asset that keeps dipping lower. So I would use a strategy called DCA, which means dollar cost average. And basically what that means is you see an asset and it keeps falling down, but you're buying in sections and fragments every time it falls down. So for example, let's say it falls 10%, you buy some. It falls another 10% and you buy more, and so on, another 10%. So basically what you're doing is you're lowering your average cost of what you bought in for the asset. So when it does appreciate and go up, you're going to have more gains. Let's look at this level over here for Bitcoin. So on the Bitcoin chart, I am looking over here at this area of interest with this sell volume. So this right here, this whole section right here with this sell volume is known as capitulation. So why it's known as capitulation is because there is large sell volume down here and there is a huge decrease in the price. So we went from up here to down here, we went down about 50%. So what I highlighted here was that we want to DCA. So let's just say we fell from the top up here and we fell right here down 10%. I would buy some. And then let's say from going from here, from this point down another, let's just say it dipped harder to 20%, buy some more. Sorry to interrupt the video, but I have to let you know about my one-on-one coaching program. I'm going to be sitting down in an environment just like this where virtually me and you can connect and you can come to me with any questions you have about crypto, any comments, any concerns. Let's jump right back into the video. At this level, at that 60K level, and now you fell down here and bought another buy at the 50K level, and then you bought another buy at the 30K level, and then it averages out closer to that 40 to 45 level rather than buying everything up here at that 60K level and then having to hold throughout this period before seeing a break-even price before you get here. Because if you do that, then basically you're holding your value until you break even for 158 days. My number one rule is to always protect your capital. This means always take profits. Always remember that your bag, your capital is all the money that you have in the market and all the money that you have to play in the market. So if you lose that, then you are out of the market. So protect your capital and always take profit. When it comes to profit, what you want to do is something called de-risk, which means when an asset goes up 100%, which means 2x, take your original investment out. So let's say you started with $2,000 and then your value, your equity of whatever asset you were in jumps up 100% or 2x, going up to $4,000. Then at this point, you can take out your initial $2,000. So now you have de-risked your bag, which means that you cannot gain or lose. Even if that bag goes to zero, you are not losing because you took out your initial investment. Another thing that you shouldn't do is marry a coin. Sometimes it's better to cut your losses. You don't want to sit in a coin that's been down for so long, sitting, consolidating for weeks at a low, when you could be in another play, in another coin, something that you are fundamentally strong on, that you know could pump. You don't want to just be stuck in something, because if in that case, you're not trading, you're just sitting there, and you could end up losing all that money too, depending on why that asset dipped. So remember, do not marry the coin. Sometimes it's better to move on. Now I'm going to go over the concept of marrying a coin. So let's look over here at this example. We're looking at Litecoin, and look at this huge consolidation range. And let's just say you bought in closer up here. So let's say you bought in at this 160 level, and then all the price obviously moved down from there, and now you're sitting on a bag that really hasn't done much, and now you're down, let's just say like 50-ish percent, more actually, 70%, and you don't know what to do. So there's two things to remember in this case. Remember that you want to cut your losses regardless of this loss right here. It is smart to cut your losses, because if you don't, you're going to be sitting in this huge range for such a long time. So if we measure it out and we look at this full range before it popped right here, that range was 420 days, so longer than a year. You're going to be sitting in a coin longer than a year and missing action. Thank you for tuning in. I'm going to close the video out here. Thank you to each and every single one of you that are tuning into my videos. Please hit that subscribe button down below and hit that bell button so you don't miss any one of my videos. And don't forget, I am doing a coaching program, one-on-one virtual coaching program, to help you get better and help you gain knowledge within the crypto space itself. So I'll see you guys in the next video. Peace.